Good afternoon, friends, and welcome. I'll be sharing live trades and results with you. We'll be evaluating how well these trades work out. We'll be benchmarking this against the S&P 500. I'm expecting to be outperforming it every month. Along the way, I'll also be sharing some lessons I've learned about investments, trading, and building wealth. And of course, the mandatory disclaimer. This is for educational and entertainment purposes only. It should not be interpreted as advice. And with that, let's get into it. Well, this is going to be another catch-up video. Our last video caught us up to this point on this trade. So since that time, there has been 3 more trades, and I'll show you what happened on those. They were some quick in and out trades. There was a buy at the end of this day and a sell at the end of the next day. That was a little loser. We paused out of the market for a little bit. We bought at the end of this day and sold at the end of this day. And that was also a slight loser. So nothing too bad here. But Adam had a really good play. And the next day, the market gapped up and came back down. The following day, and that's actually where we made our entry. As I said, sometimes these show up sort of a day later when we're looking at historical things. But, this was a really interesting entry because a few of us were talking about this thinking, well, I don't know if this is going to be any good. We've been in this falling market for so long. What's going to be happening here? Well, things seem to play out pretty well because Adam just stayed in the market for, looks like, 3 to 4 weeks on a leveraged entry. And the results of that was pretty good. We ended up exiting on May 22nd. So let's head over to the tracking sheet and see how those trades did. All right, let's check out the last couple trades and see where we are year to date. As I mentioned, the last video took us up to the 11th of April. So there's been 3 trades. You saw them on the charts. There were 2 losers. One closed on 414 and showed us a loss of minus 0.33 against the market buy and hold of 0.89. So that wasn't a good trade for us, but certainly not too bad. The following trade closed on 422. This one was kind of an interesting one. The market showed minus 2.3 and we were 0.2. So this is a really good example of, even though I'm trading the derivatives, the 2 times the S&P 500, just because of the timing of the trade, we're actually losing less than the market does. But the big story is, what's happened in the last month. We actually held that position for a whole month. That was kind of amazing. The S&P during that month had a really nice recovery, gained almost 10%, 9.55. It brings the year-to-date buy and hold strategy. The S&P is just slightly negative for the year. So here we are sort of at the end of May, beginning of soon to be June. The S&P basically is flat, but Adam has just been a rock star. Even the last 3 trades, all we've been doing is, making up some lost ground, especially, I still have last year in my memory, but this year's been going pretty great so far. So that trade brought in 17.87% return. That brings our year-to-date return up to 19.93. So, we're sitting just below 20. The trading, the S&P is basically flat. I think Adam is doing a fantastic job this year. Really, really good. If we looked at some of our stats, they're also kind of interesting. Our winning trades are only at 55%, which, usually they're around 70. Even in our bad year last year, we were still had winning trades closer to that number. But we're way below our number of winning trades this year, which I find incredibly interesting given that, the beat the market factor is sitting here at 10. Anything over 1 is really good. We like to see that around 1.5, or if we even get close to 2, that's a great year. But right now, being up 20% when the market's basically flat, that's a great spot. And again, this is just a custom factor showing, compared to the S&P, how much better or worse are we doing? If we're matching performance, it's a 1. If we're below the performance of the S&P, it's a negative number. And, it's just a factor up from how much better we are than the S&P. So, again, we're way over on that number. I added a couple other interesting things for me, but just looking at the time period that I started the YouTube channel and showing the data, the compounded annual growth rate is a key indicator for me. And the S&P up and through last year was, almost 14%, 13.79, just outstanding. Our trading compounded annual growth rate, 19.74. If you add in the current years, the S&P, since it's basically flat this year, it's actually a lower compounded annual growth rate. But because we're pretty positive, our compounding annual growth rate is actually quite good. It actually went up from last year. So I like this compounded annual growth rate metric because it takes in some of the volatility and gives you sort of what is sort of your expected returns that you can see over time. So I'd say that's a pretty good result. This indicator I think is pretty good. You can see our 4-year year over year. I'm probably not going to get over last year for a little while, so I'll try not to keep talking about it. But our performance there was pretty poor, even though 3 years prior were excellent, and this year sort of making up for it again. And as you know on this channel, our goal is to beat the market. As long as we're beating the market, I feel like we should keep trading. And if we can't do that, we should stop. And the metric that I'm going to look at is right here, is my compounding annual growth rate beating the market's annual growth rate. And if it's not, I don't think Adam and I will be trading anymore. But as long as it is, and we're almost up 2 times the compounded annual growth rate, each percentage greater, each like 1% is pretty important, but a couple percent year over year in a compounding way is very important. And if you're anywhere, 5% better than the market on a regular basis, I think you're going to be doing great, and you should continue your trading too. And if you're not beating the market, you can consider a buy and hold strategy, unless you're able to really reduce volatility in some way. But anyway, that brings us up to current. Right now, Adam's having a pretty good run as of May 22nd. Let's hope he continues to do that, and we'll have to see what happens on our next set of trades. That's it for today. How do you think we're doing? Please comment below and let me know how this compares to other investments you've seen. This is for entertainment and educational purposes only. It should not be taken or interpreted as advice. Until next time.